Over the past few months, I've been aggressively acquiring Bitmine, and I'm going to show you guys why it's become one of the largest positions in my portfolio and why I continue to double down, especially at these prices. So, first up, Bitmine Immersion is a Ethereum treasury company that currently holds 2.65 million ETH tokens. That's as of September 29th. They also have a little bit other holdings as well. We'll talk about that in a second. But what makes Bitmine so incredibly amazing is the speed at which they've been able to acquire this Ethereum. Just starting on essentially July 15th till now, they have quickly become the number one name in Ethereum treasuries and the second behind Strategy amongst any digital asset treasuries. Whenever we start to break down their holdings, however, they have about $11 million in Ethereum at $4,141 per ETH token. They also have 192 Bitcoin, 157 million in 8co holdings, and $436 million in cash, which is going to allow them to buy more Ethereum. Hopefully, they can actually end up getting more cash by selling more stock and buying more Ethereum, and Ethereum goes up. That's the idea of the treasury. But I'm going to show you guys why Ethereum is the name to be purchasing. Currently, as of the time of recording this video, Ethereum's at $4,169 per ETH. So just a little bit of appreciation, but we're essentially flat on the market value versus the book value. So ETH needs to aggressively continue to climb in order for them to make real money. They also have about $600 million in those other holdings that we just talked about. Things like 8co, for example, which they just put in a $20 million investment that's now worth $157 million. That was on September 8th. They're already nearly an 8x return just in September. It's quite an amazing return. That's the, Tom Lee guarantee, I guess, as they say. Now, the market cap of Bitmine is roughly $15 billion. On that 11.6 million, that essentially puts them at an MNAV on their Ethereum of 1.36x. With all their Bitcoin and cash and everything, it's about 1.3x as a multiple of those holdings. But yeah. So why am I so bullish going forward? This is the important part. As Tom Lee points out, that the average in which Bitcoin usually trades at compared to Bitcoin is the ratio of 0.0479 times over the last 8 years, with the high being at 0.87 times. Today, we're at a much lower rate, okay? Only 0.03655 times Bitcoin per ETH. So just to bring it back to this average means that Ethereum needs to run up quite a lot, or even to get to its high, it would be even higher than that. So we're below that average. Now, as Tom Lee has put it, if Bitcoin is between the prices right now of 100,000 or 125,000, that should place Ethereum at 4,700 and nearly $6,000. Now, he actually believes that by end of year, Bitcoin should be about $250,000, meaning Ethereum should be anywhere between $11,000 to $22,000 based on that ETH to Bitcoin ratio. Okay. So decide where you think that it's appropriate for ETH to trade at versus Bitcoin. That's sort of how he thinks it should be traded. Another thing that we need to highlight is just how great these treasuries can be versus holding on to the coins itself. Strategy, for example, MicroStrategy, has been able to increase their price of the stock versus the amount of impact that Bitcoin has had just appreciating in price. So, MicroStrategy has 10x their Bitcoin cost. The actual implication is that, the treasury strategy has added that additional 15x. Okay. So it's been a much better return than just buying Ethereum. Potentially, Bitmine could be doing even better than this because the rate at which they've acquired their digital asset, which is Ethereum, much faster than MicroStrategy has ever been able to, okay? Meaning that they're actually faster at acquiring that coin than if that could appreciate, that could be much better. And also, a large part of the reason why I'm so bullish on BMNR, and I've never had a stake in Strategy, is that I'm a big believer in Ethereum being more like oil than it is gold as Bitcoin, right? So a store of value, I've never fully understood. Obviously, versus the dollar and versus all the debt that the United States has, it makes a lot of sense. But what I love about Ethereum is not only does it protect against a lot of those things, other than, just holding on to stable coins and such, but it also has things that are very much like a stock that you would love to hold. For example, many stocks have dividends. Ethereum has that staking rate, right? So you also can earn that 3% while also inherently being slightly deflationary. Right now, it still is inflationary, and Bitcoin is very much fixed in terms of the amount of total tokens that will be outstanding. But Ethereum, if it does end up getting to be like a large utility and people are using it for stable coins and identity and, for whether that's prediction markets or stock trading or tokenization of all assets, that is going to inherently pay more gas fees and lower the total amount of outstanding supply. And as you can see here from Treasury Secretary Scott Bessent, he thinks that stablecoins are going to grow as a percentage of the overall amount of usage, right? Stablecoins could grow into a $13.7 trillion market. That's essentially, a 15x from where we are. And that's what we're seeing so far. So as you can see, total stablecoin supply just continues to grow over time. And yes, there are many chains that are doing this, but it is heavily being done on Ethereum. Way faster growth on Ethereum than the other two, like Tron used to be a very large one as well, but that's actually starting to decrease now as a total percent of stablecoin supply, and Ethereum continues to climb. Another one that's climbing that's placed into the others category is Solana, but that's for another video. As you can see, the companies, by the way, these companies have massive amounts of customers. Like PayPal has over 430 million customers, 800 million total vaulted customers, meaning they were a customer at one point, but maybe aren't using their wallets anymore. But now they're starting to get into stable coins, built on Ethereum. You end up seeing Walmart and Amazon show their interest into getting into stablecoins. Essentially, all they are is large payment companies, right? Amazon makes all of their money from payments on Amazon.com. AWS completely different. But those businesses are running on payments. JP Morgan now has JPMD, Global Dollar Network with Robinhood and Kraken and all WorldPay and Bullish. All of these massive companies are now looking into getting Ethereum-based coins. Bank of America calls Ethereum the next stablecoin rail. This was just in July of 2025. And then this, probably the largest news most recently, September 22nd, there's messages going out to Paul Atkins saying, hey, we want alternative assets, as Trump has described, to be able to be purchased in 401ks. That's massive, $6+ trillion more than the overall market cap of all crypto. $4 trillion is traded in crypto right now. That's the total market cap of crypto. 10 trillion is what's sitting in 401ks right now. So that additional 6 trillion, larger than crypto itself, could end up finding 1 or 2% allocations at the minimum into crypto overall. So these are massive changes. Then you have companies like Goldman and BYN looking to tokenize money market funds. You have E-Trade now allowing customers to buy Bitcoin, Ethereum, Solana. They've got billions and billions of dollars. If 1% finds its way, that's a massive amount. Robinhood doing the full thing. So not only did we see them, partner up with Global Dollar Coin for stable coins, but they're also looking to get into stock tokens, like tokenizing stocks, doing staking, crypto perpetual futures. This all increases the total amount of usage and demand for cryptocurrency. Robinhood Chain, not only are they getting extremely involved in tokenizing stocks, but they're building a layer 2 blockchain on Ethereum, not on another network, directly on Ethereum. So they are fully aware of the chain that is going to be placed first place. And as even Sharpling says in their earnings presentations, Ethereum goes up $1 for every $2 of assets secured on Ethereum. This is what they've proven over time. So as Robinhood and E-Trade and all of these companies end up finding more and more money or tokenizing money market funds or stock trading or anything, that is what should potentially increase Ethereum's market cap over time. Whenever we look at what investment in order to place in this, you want to find the ones that are able to get the highest amount of Ethereum per the amount that they actually have, selling their equity. And the ones that have been able to do the best is Bitmine, and it's not even close. Second place is Bit Digital at 11.5%, which, by the way, they just ended up raising another $100 million to go out and buy Ethereum. And the great thing about this space is that, their competitors doing well also goes to benefit Bitmine as well, because all of them end up acquiring more and more Ethereum, which takes down the supply and increases the demand, making the price go up even further. Bitmine has proved to be something special here. On top of that, like I said, that additional 3% staking yield completely changes the game for these treasuries. It's not just acquiring, the total amount of tokens that you can have and hope that it goes up into the future. Even if Ethereum is stagnant over time, the amount of money that they continuously make can continuously go up. 3% is nothing to scoff at, especially for, the hundreds of billions or even trillions of dollars sitting in treasuries. It's very important to know that, you could get 3% on the money that's sitting there, unlike Bitcoin at 0% or gold at 0%. So this is Bitmine's projection. If Ethereum is the future of finance and many of the rails, because of the ideas of, instant settlement and security and transparency and all of these things is much better on Ethereum, more and more money could be flowing in this direction. Meaning that although, and it's not 4.4 thousand today, it's 4.1 thousand, but if Ethereum could get to 60,000 eventually, this could be quite the appreciation. Now, you don't have to, we're not going to stay on this to break it all down, but hypothetically, what could happen is that if Ethereum does get to $60,000 per coin, okay, at 2.1% total supply, we're looking at about 14.4x on BMNR. And that's not including any additional dilution, because we wouldn't need to. We already own all the ETH that they currently need to hold. However, if they want to get to 5%, this could be a 32.8x from here, but I'm not counting any dilution on here, okay? There definitely will be dilution. There might also be a change in ETH supply. There's a lot of math here that is not fully baked in. Now, I'm not suggesting that BMNR immediately 14x's or 30x's from here. I'm not a crazy person, okay? But I think a little bit, shoot for the moon, and even if you miss, you'll land amongst the stars. If I'm hoping for a 2 to 3x, based on the amount of money that is going to transition over onto crypto-based rails, if you're hoping for the 60,000 ETH, getting 10,000 ETH, 12,000 ETH is still going to be a massive benefit from here. Betting a small speculative bet for me, for my position, I'm not telling you guys what to do, but for me, that's easy money to put to work, knowing that I'm buying, the digital oil, the productive asset of the future, not just hoping for people to buy, the next store of value and hope that the price goes up. Even if it stays flat, just securing the network alone will be, a 3+% yield, which is even higher than most checking accounts or cash that you could make in some accounts. So I just think that this is a slam dunk. Tom Lee being the leader here is an absolute win. But ladies and gentlemen, tell me what you guys think of just this first look at BMNR. Make sure you guys hit subscribe if you want to see more BMNR. But until next time, bye for now.